If you're a high income earner with a pass-through business entity, you don't want to miss this video. Today I'm going to break down the Small Business Relief Act in Assembly Bill 150, which is specific to California, but many states have adopted similar bills, and I'm going to show you how it could save you thousands of dollars in federal income tax. So stay tuned. Hi everyone, Erica here with Paragon Accountants, where we're here to help individuals and businesses build their financial legacy. Today I'm here to talk about the pass-through S.A.L.T workaround. So stay tuned because this is exciting and can save you tons of money in federal income taxes. So before 2018, the Tax Cuts and Jobs Act allowed individuals to claim a deduction for certain state and local taxes, otherwise known as S.A.L.T, paid in a tax year if you itemize. The Tax Cuts and Jobs Act limited the S.A.L.T deduction to $10,000 for individuals and married filing joint couples, which is a significant increase in taxpayers' effective federal tax rate. The Small Business Relief Act under Assembly Bill 150, specific in California, but other states have also adopted similar rules, is a response to or a workaround to the $10,000 S.A.L.T cap. So, if you qualify, your pass-through entity could pay your state taxes, reducing your pass-through entity's net income reported on the owner's K-1 for that year. Under this rule, you can elect to pay 9.3% of California state taxes through your qualified net income, providing you, the recipient of the K-1, a California tax credit equal to that payment. So, sounds interesting? Let's dive into who is eligible. So who's eligible? Those pass-through entities will be partnerships with members that are individuals, trusts, or corporations, and S-corps. One key note to remember, which is a huge benefit, is that if you are a partnership that is eligible, all members of that partnership do not have to make this state election, which is an even bigger bonus. Next, who doesn't qualify? So who does not qualify for this pass-through entity election? Well, publicly traded companies, C corporations, and entities of partnerships with another partnership being a member, as well as self-employed individuals or single member LLCs, which essentially are a disregarded entity for tax purposes. Now, how do you calculate this credit? Well, for simple math purposes, and I just want to put a disclaimer that this is just an example. Obviously, you need to meet with your tax professional to get the details, but for a general understanding, let's say that an LLC has qualified net income of $200,000. If you were to make this election, you can contribute or pay in advance 9.3% towards your California state taxes. That then reduces your $200,000 net income to $181,400 based on the $18,600 you're eligible to contribute or pay towards your California taxes. So let's take all of that into account one more time. LLC has qualified net income of $200,000. You're eligible to contribute to your state taxes at a 9.3% rate of that $200,000, which equals $18,600, and then reduce your federal K-1 income on box 1 by that $18,600 tax payment, which gets you a net of $181,400 in taxable federal income. Assuming you had an effective tax rate, a federal effective tax rate of 30%, you would be saving $5,580 with this example by making this election. It's a huge, huge savings, and it can only multiply by multiple members, and if your income is significantly higher, it's an even bigger win for you. So now we've got that example taken into place. I do want to mention one caveat to this state tax credit via the pass-through workaround. is that this credit, this state credit that you make in advance is non-refundable, meaning if there is an overpayment to your state taxes, you will not receive a refund. But not all is lost. You will be eligible to take a 5-year carryover to absorb that credit after that filing year. Okay, so have I got your interest yet? Are you ready to know how to make this election? First and foremost, the election must be made when the tax return is filed, and the initial tax payment credit must be made, or a portion of that payment must be made by June 15th of each year that you plan to take this election. Obviously, there's much more specifics that need to be considered, but you should be speaking with your tax advisor on this potential opportunity to save yourself thousands of dollars. So, that being said, everyone is starting to meet with their tax professionals to file their taxes. So this is a great opportunity while you have them in front of you to ask about the S.A.L.T workaround with him or her at your tax appointment. Today's video is a very general overview of the Business Relief Act, but there are a few specifics that we haven't covered for the sake of time, which is why I'm recommending that you meet and schedule an appointment with your tax professionals now so that you prepare for saving thousands of dollars in the 2022 tax year. Thanks again for watching, and remember to follow us on social media for more financial tips, because your business is about more than just money. It's about building a legacy of abundance. Thank you for tuning in. Please share our video, subscribe, and we look forward to seeing you soon.